Welcome, your Trade of the Day brought to you by Day Trade the World. As always, Tesla, Tesla, Tesla. Where art thou, Tesla? To the downside. However, I did have an idea for long. It's not always about whether you were right. It's about how you execute the trade and how you can learn from it. So I want to start things off a little bit here, just going with the higher time frame. I've blown up the 15-minute chart because this is what I came in looking at. Hindsight's 20/20, and you can see what's actually happened here today. But if you remove this, what I see is that 155 bottom. Stock been under a tremendous amount of pressure. You had a wick bottom through yesterday, rejection of that 155 to the downside, holding above 150, actually holding around 52s, and then a pure breakout, reestablishing 55 as support, especially in the afternoon. So the way I was looking at it and approaching today was I like the 155 and on the long side. Now, I did love a 161 short. So pie in my face for yesterday liking a 161 short, seeing this pop and fade and not taking it. That's a separate story, and I'll get to that in a little bit here. But my plan was to go long on dips into 150. The initial dip bounces hard right at the open, 156.50. Like, okay, that's probably good enough for a little bit of a scalp trade. You're getting that whipsaw snapback action. Remember, it's also quad witching, so you're expecting there to be more volatility, and I'm thinking we'll see some seesaw action at the open. Had a meta long that I maybe covered too quickly as well there. But grab that quick little bid, grab the scalp trade, and all of a sudden it's heading right back into my line in the sand. It's that 155 level. We see a double bottom at 155 and right back into scalp mode. Take it a couple of times, scalp a couple of times in for 50 to a buck, and then it plays into 158. And this is where at least, if you're not going to be with the trend, you've got to at least accept the reality of the situation you were in. Because as it gravitated toward here, you can go back and watch the morning show. What I was sort of telling people was, you know what, if it breaks back down beneath this 157, I'm just going to cover, trail the 156. It only wants to give me $1. I'll just take the $1. And as it started failing up here, I changed my mind. I didn't want to have a trailing, I did still want to have a trailing stop, but I was going to make it an even tighter stop. Because the way I saw it is I can trail this to the 50, just bank an extra 50 pennies on that trade, make $1.50 per share instead of $1 per share. Because if it's going to break 158 here, then I should be able to find my way back into a long anyways. That's the plan. Why let it come all the way back, show even more signs of bearish, let alone that wick top up to 161, show more bearish action, and I'm just giving it more into the back end. I went to the well, I think, one too many times here, and this is where I'd say this is the mistake that got made. There's no need to take that long. When you're looking for a dip buy, a lot of times it's going to be counter trend. And how you get the fill or how it trades into you is going to matter. It's a much bigger, different situation taking the initial push down or a nice consolidation support trade. But when then it holds the higher low and then comes screaming down into it, you don't want to catch a falling sword. I did, so the third time was not a charm when I get stopped out. What happens when 155 eventually breaks? That's the turning point line in the sand for the short. Do I eventually short it? Yeah, I'm short it right now. And the reason why is, should I have had 155? You miss it, you got to move on. If you look at that bottom from yesterday, right in here, body of these candles here at that 52, there was a little bit of a wick beneath that, but it's that 52 level into 150 that I was concerned with. So that 150 never breaks. Sure, everyone wants to look at that same breakout, but it establishes 52 as resistance. That's support from yesterday at the lows. So resistance turns into support. Scalp the 151.5 in front of it. Takes them out 150.50. I'm actually holding onto a piece in case we can get the 150 break. So I'm not taking the break. I'm actually allowing it to get through if it wants to make that move. You're not always going to be with the trend. That's the reality in trading here. But you can still be up on a stock as long as you have a plan of action, as long as you have an out, and as long as you can recognize when things are changing in front of your face. So yesterday I liked this Tesla short. Today I didn't come in thinking the same short, which would have been gold. Still able to make something on it because we accepted that we were against the trend and got out of Dodge when the time was right. That's Tesla. That's your trade of the day. As always, check that QR code below and always check us out at Day Trade the World.